Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 3 o'clock in New York on Monday, the 4th day of May 2015, and this is the daily report for gold and silver. Another dramatic move, this time to the upside following 2 days of significant selling in the market. We are currently up about $12, that's according to Signal's take on it. When we look at net change, same price of course, $9.40 higher when we look at Kitco. Now, the low 76.60 and the high today has been 11.9210. Silver also trading higher, up roughly 25 cents, 16.39, with a low of 16.12.5 and a high of 76.50. We'll look at silver in a little bit. So traders, a couple of things can be gleaned from today's trading activity and price changes that we're witnessing in the market. As I said, we're up over $10 on the day. We've had a dynamic recovery as this market sold off really hard on Thursday of last week and had follow-through selling come in on Friday. The one thing that's quite apparent right now, the support level, and we talked about this on Friday, to trigger a sell signal in the market, I needed to see some sort of a break below 72. Because that's really where we're looking at our really strong support in the market. In terms of resistance, we have pretty strong resistance at 1200, but even more so than that, 92 seems to be, and that really correlates to the high of the day, but 92 is an important fib number, and so that is also a key area that we need to watch. Now, in terms of my longer term view in gold, there's absolutely no doubt. I'm still looking for the marketplace to go lower. However, prior to that, we've had this little rise, and you really can't see the type of count that we can look at for that. We really need to then go to some intraday work to see where we are within this cycle itself, because my current belief is that we've either completed for, as the system is pointing out, or we've completed for up here, although I think that we are probably in some sort of a fifth wave, an extended fifth wave. So traders, to really illustrate where I think that we are currently at in terms of the minor wave count, as well as our marketplace itself in gold, as you can see, I've put up a very, very short term. This is a 2-hour candlestick chart. And when we do that, the wave count that we are currently looking at was a move from this market here just above 1172, and we had a 1, 2, 3, 4, and then 5, a 1, 2, 3. We are in wave 4 right now, and in terms of our targets that should be hit, we have hit our upper level targets. These are the 3 targets, which means that we will probably now see lower pricing as we go into a lower fifth wave. That fifth wave should take out 1168. So traders, as I said, that was on a very, very short-term study. When we move our study up to a 240-minute, meaning a 4-hour chart, you can see that the targets become a little bit higher, anywhere between, call it 1193 and 1198, and that's going to be the area, should we see this market have the ability to make it above there, that's the area that we really want to look to actually go in and short the market. One strategy is going to be to place a price order in to sell the market at, say, 95 or better, 93 or better, placing a stop just above 1200. That's one strategy, but we're going to look at our daily charts to see when they come into alignment, because we're looking at this through the eyes of a very, very short-term trade, but when they come into alignment and then initiate our short position. We're still on hold, but we are still looking to pull the trigger when all of the necessary parameters are met. So traders, in terms of some of the other markets that we're looking at, slightly lower pricing here in crude oil, but it still could have a little ways to go before we see our last wave down. Our wave count on the crude oil market right now is we had this long wave 3. We're currently in some sort of a wave 4. Once that terminates, we should get a lower price. In other words, we should get a wave, and that wave, being wave 5, should go below wave 3 on crude oil. So traders, we're looking at our basic dollar chart, standard candlestick format. This chart, of course, has got our current Elliott wave count. Elliott wave count showing we had a long extended move. The top of this move at 100 was a third wave move. From there we went into a corrective stage of a B, and a terminating C. If that's the case, and if we have terminated, because the projections right now say we could see this market move a little bit lower, as low as about 93, but if we get some support in this area, then we would go back into a bull count, a 5 bull count, which would then, of course, take us above these current tops at 100. Now, traders, we looked at the dollar index, and of course, dollar index is the dollar against a basket of foreign currencies. This is specifically a euro dollar as it is paired against the US dollar. When we look at that and we look at our current studies, we do believe that we could see some more upside price increase in the euro, going as high as possibly 115 to maybe 117. Those are the prices that we would look for. Now, where are we at in terms of a count? Long wave 3 down. This is our counter wave 4. Fifth wave would take us to lower pricing if the market unfolds through a standard Elliott wave pattern. In terms of our current short count in silver, we're looking at the possibility that we have just concluded some sort of an ABC, this being a 720-minute chart, half a day candle. Let me go ahead and pull that down. 720-minute chart on silver. And the way that we're looking at this market is as follows. A, B, C, right in here. 1, 2, 3, 4, 5. This is taking us down. A, B, and C. And so we should now head really into a 5 count to the downside. 1, 2, 3, 4, and 5. So just as with gold, we are looking to initiate a short position also in silver. Once the parameters line up, we want to make sure we're not going to see any more upside. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow for another daily update review. Bye-bye.